The market cap is not at an all-time high because buybacks have so vastly reduced the share count, John.
All right. Well, President Biden, as we mentioned, taking his economic philosophy, or Bidenomics, on the road today. The president laying out his plan for investing in America. For a reaction, let's bring in Richard Bernstein, CEO and Chief Investment Officer of Richard Bernstein Advisors, and Courtney Rosenberger, Managing Director, Policy Research with Strategas. Courtney, why has the president gotten so little credit for the good things in the economy and so much heat for the bad things, including those spiking gas prices from several quarters ago?
Yeah, I mean, so the administration thinks that they need to sell their accomplishments better, which was kind of the impetus for this speech. Similarly, we saw this done in the State of the Union and in Biden's budget. But we kind of view this as the shoot anything that flies, take credit for anything that falls strategy that the White House is doing right now, where they're just trying to showcase, regardless whether or not their policies resulted in these things coming through, with inflation coming down, consumers' incomes going up, gas prices going down, them trying to get credit, show it to the voter ahead of 2024, and more importantly, which I think we saw consistently throughout Biden's speech today, contrast with Republican policies.
Well, it comes back, Rich, doesn't it, to that classic question, are you better off than you were 4 years ago? But it's a complicated one where the economy is concerned, because people might have fears that feel like they're not better off. They might in some ways be better off financially, but oh my goodness, the consumer certainly is stretched. How does one answer that question about the American voter right now?
So, John, I think as long as the labor market remains as healthy as it is right now, it will be easier through time to say that households are better off. I think if the labor market starts easing up and we start seeing unemployment rate, heading towards 5% by the time you get to the election next year, I think that'll make it more difficult. But if the labor market stays high and wage gains continue, I think I'll have a reasonable shot at convincing people they're better off.
Rich, on that note, just how bullish are you on the markets? I sort of want to put this carefully on the idea that we can avoid recession, but kind of where do we go from here?
Yeah, Kelly, the first thing is, I think, the word recession pops up every 2 seconds these days. And, this has to be the most widely forecasted recession that's never occurred. Consider for a second now that early cycle sectors like housing and home improvement, those stocks are starting to break out big time after the Fed has raised rates 500 basis points. This is not in anybody's textbook. This is not what's supposed to happen. And so I think the message here is that the Fed is going to be raising rates for a lot longer than people anticipate, probably longer than they anticipate right now, if the stock market is right in some of these early cycle sectors. So I don't think we want to start talking about recession prematurely. Has the economy slowed down? Has the labor market slowed down? Of course it has, but there's a difference between a slowdown and a full recession. And right now, that recession's still out there somewhere, but who knows where? It's not here now.
Courtney, is it because of Bidenomics, because of all this fiscal spending and investment that we continue to see?
I mean, we did have massive fiscal stimulus at the same time that we saw Treasury and the Fed still engaging in monetary easing, but that is starting to reverse. So we're just urging some caution, on our front, looking at the fact that we do have liquidity reversal, and that's going to be continuing for the next several weeks to months. And we're starting to see kind of the first signs of that taking the toll on the market, with communication services underperforming industrials, and we anticipate that to continue into kind of the growth versus value trade. And then you also have other concerns going on with the economy, where we're starting to see cracks in labor, CapEx, and with the consumer. So we are just urging some caution with that. Some of these conditions that led to the surge in kind of the Biden economics are starting to reverse.